Hi traders, once again this is Alfred from BinaryOptionsTutor.com. I'm going to try this a third time, trying to be less verbose and really cover everything that I want to get covered in this one video. First I want to thank everybody for the views and taking the time to really watch the prior video that I done on Nadex, 5-minute out of the money binary scalping. So I'm going to continue on that topic for this video, and I'm going to talk about something that a lot of people don't talk about, but I really feel like this can improve your timing. But it just sounds really complex, but I want to try and break it down in a really digestible fashion. Okay. One, our primary source of income right now, and has been for some time, is importing. Me and my brother, we run sites and we import products which we will break off for retail in some instances, as well as selling on the larger platforms, and we will resell our imports to other guys at a wholesale price so they can break them down and produce them for retail. Now, today I want to talk about something that can really help, and I'm going to try and relate it to a real world instance so that it all makes sense. We're going to focus on the bid and the offer on the Nadex platform, and we're going to talk about liquidity, how to read liquidity. Why I start off talking about what I'm doing with my brother outside of trading, because it's liquidity in the supply chain. If you ever listen to the stock channels, you'll always hear them talking about the supply chains, etc. Here's the thing: if I'm aware, or sometimes really there'll be this magical time of the year when, okay, I happen to have ownership and possession of, let's say, around 200 pounds of a specific herbal supplement that's in demand, and not a lot of other people, or hardly no one, has it in at that time, because some of the stuff we sell is kind of exotic. Okay, now when that happens, I'm not saying that I always do this, but I'm saying that one of the tools I can pull out, depending on where we are with cash flow, etc., is when that happens, I can instantly set my price, because I know, because I'm importing, that the supply chain slow. It's going to take a while for someone to get the herb here in the States, whether they want to retail it or whether they're using it as an ingredient in something else that they are producing for retail. So I know I can set my own price then. Okay, in trading, there's the same thing. There's a market maker, and a market maker, when liquidity is low, they can set their own price. What's a good time to buy from me in my example? Probably not when I can set my own price. I mean, you could say, well, gee, Alfred, you sound like a real nice guy, blah, blah, blah. But do you really want to purchase from me when I can literally set my own price? No. And you don't want to trade when there's low liquidity. Wait, there's good news. Low liquidity is really easy to spot with the spread, and it's really good to help you with your timing as to when to enter a trade. Because competition is good for the consumer, when liquidity is low, it's usually bad for the consumer, right? So let's talk about how to spot it real quick. Those flashing numbers that you see in Nadex. Let's start by looking at low liquidity and when not to trade. And let's show you how to spot it in a second. Here we go. Bids over here. Okay, bids over here. We're going to be buying in this example. I really wish the Nadex was open, but I'm just gonna type these. Bid is 12, okay, and the offer is 41. Now, if I'm buying at the offer, okay. I've got $41 of risk. If you've went back and looked at, or if you're already looked at the other video, $41 of risk is not bad. I specifically mentioned 32 to 46 and 41. That's your max risk for this out of the money bet. That's within that parameter, 32 to 46. Okay, it's a little pricey, but okay. What's the problem? Way back here, you've got to sell this back into the market at some point. What's already priced in? 12. Okay. While you're in there, time's ticking down, and on top of that, there's only $12 left in this contract. Now, timing wise, this probably means that what you're looking to accomplish has already been priced in. You see how quick it is to look at the pricing and understand liquidity. What's another thing here? Look at that. The distance from this number to the other number, it's almost $30. Okay? So that's low liquidity. Now, let's do another example. We're going to be selling this time. Okay? 67 and 91. Okay, you're thinking about getting into a trade. You've done all the other stuff we talked about in the other video, and you see this. Okay, distance, that spread between those two numbers, kind of wide. That's low liquidity. When low liquidity is going on, that's your sales side's great because, hey, you're only going to risk $33. But what's left in the contract? 9. Okay? And the time is ticking down on this out of the money 5-minute binary option. Quick and easy. You're now taking what the market maker is sharing with you and what 95, maybe 95% of the people are not aware of or not using, and you're using it to help your timing. And when the market maker is setting up those traps in those low liquidity areas, you're going to avoid them altogether because you now understand this. That's all it is, guys. Let's look at some good examples. Okay, you're getting ready to buy. 34. It's on the bid. 39 is on the offer. You see how the distance here isn't very much. There's only $5 in between those. Okay, you're ready to sell. You see how you only got $39 of risk there. Okay, you're ready to sell. $65, $72. That's low liquidity. Again, see that distance? Just 7. Okay, $7. Quick, easy, and spotted. Really quick. And it's going to improve your timing, and it's going to help you to not just be throwing money out here guessing, but you're going to have one more component that you understand in the market. Okay, now I'm going to show you guys a live trade, just like I done on the other video for the visual learners. If you're interested in this type of stuff, here's another live example where I'm just doing a quick in and out of the money scalping. You need the market to move, and you need liquidity. And what I talk about in my example, I used myself and my brother's, one of our businesses, as an example. When look, you want to be trading here because you're trading out of the money. You want the market to be moving. You want there to be several market makers there competing for your dollar. All while this is going on, there are a lot of market makers, there are a lot of market participants because there's volatility in the market. Liquidity goes along with volatility, volatility goes along with volume. You don't want to be trading here. Really, let's see it hard. Here, is it going down? Look at my crosswalk. There's hardly any iterations to the upside. Yes, it's going down, but look at the iterations to the upside. They're so small. Look at the price action here. So small. Even if you get in, again, there's what I was talking about. Not enough volatility going on at the time for you to get to that out of the money bet. For those interested, this isn't anything super complicated. I'm on a minute chart. There's 15 SMA. There's 150 SMA. Got a little bigger numbers because I'm broke down to a minute chart. Same thing. You look at a lot of my videos. This is nothing but two moving averages, blue, red, determining my bias and just trading that way. Okay, stay tuned guys for the live video, and also thanks again guys, everybody that's taking the time out of your day to really check these videos out. And I know trading can be difficult at times, but you guys are doing a great job. The very first thing you have to do is educate yourself, and so you can understand what's going on in the market and help combat that psychological warfare that's going on when you enter into a trade. If you haven't already, please check out the prior video where I lay out more of the ground rules prior to the little quick poppy trade, and I lay out the fundamentals of what you want to be looking at when you enter the trade. Note that in both of my examples, the risk was less than the counterparty's risk. That's all I have guys. See you guys on the next video. Once again, this is Alfred from BinaryOptionsTutor.com. Please like, share, comment, subscribe. It helps us and it helps others find us here on YouTube. It's absolutely free. This takes a little bit of your time. Thanks in advance. Okay, this is a very fast trade. Looking at scalping out of the money. Well, maybe about slightly at the money. Originally, I'm coming here. I've got 4 minutes and some change. I decided to not get in there. I wanted to see the chart. The chart looks good. It looked good, and I really like getting in early, but getting in too early, I haven't seen enough of the new formation of the candle. So in a perfect world, I like to at least wait till somewhere like 3 minutes, till I have like 3 minutes and 40 to 3 minutes 20 seconds left, somewhere in there. So I'm actually watching the price action now. I can see we just came off a substantial down candle, and I can see on the pricing over here on Nadex that we're just not getting what I need to make a decision. Okay, now I saw some rejection, and I see a new minute candle forming. I'm really ready to make my decision now. So I'm dropping the chart. This is not something I advise, but I'm just looking at the price over here at this point, and I can kind of envision what's going on. I also know the price that I want to get in at. So I'm waiting to see something happen. with both the price that the market is at according to the indicative and the price that I want to get in at. Okay, I saw a push down and a bounce. Now I'm going to click in. It got filled. I have to move really fast. That's why I'm doing this, just talking it out on overdub. I'm moving this over just so you guys can see where I actually got in at. Waiting to see my contract coming to money. There we go.